How's it going, everyone? It is Andre Williams, and you know what time it is. It is time for the joke of the day. If you are new to this channel, we do this 5 days out the work week. Maybe you had maybe you had a stressful day. Maybe it was the market conditions. Well, you came to watch this video, plus hear one of my corny jokes. So here it comes. What do you call a country where everyone is pissed? A urination. Right, that's right. Hey, come on now. But anyway, so what we're going to be talking about today is ChargePoint. And the reason why I'm talking about it, you guys know I have very high conviction for this play, especially for the long term. We've noticed there's been quite the pullback inside the market today. So what does that mean? A lot more deals to get the stocks that we like at a great price. But I also want to put in the disclaimer. I'm not a financial advisor, and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So what is the agenda for today? So I came across an article that I want to share with you guys that also breaks down as far as the valuation and why the potential price target that we can look forward to, which is that $50 range, will come, especially if you are a patient investor. So that will be broken down for you. Of course, we're going to be doing a technical analysis, and we're also going to be taking a look at the institutional ownership and as well as the short interest information. I feel like if you're an investor or you're a shareholder, that this type of information you need to know, especially if you have long-term conviction in ChargePoint like myself. So let's get into it, and I'll give you guys my final thoughts afterwards. So we're now on investorplace.com, and we're going to be going over an article for ChargePoint. So here it is. So good value, ChargePoint is worth 99.8% more than its current price. So that's 100% upside there. So ChargePoint stock is worth $42.72 or 99.8% above today's price based on discounted 2026 revenue forecast. ChargePoint Holdings has had a rough go of things. Even before its reverse merger year to date, ChargePoint stock is down $18.70 from $40.08 at the end of 2020, a drop of almost 47% to $21.38 as of April 19th. Moreover, since its reverse merger with a SPAC, a special purpose acquisition, closed on March 1st, the stock is down 29% from $30.11. Not exactly a great start for a newly public company trying to take the EV charging world by storm. The good news is that the stock is probably going through a temporary dip. One of the biggest fears in the market right now is that the chip shortage will affect future sales. Several large auto manufacturers have had to stop production, including some EV manufacturers. The fear is that EV charging companies won't be able to keep on producing their charging stations at the same pace. However, one area of good news is that the Biden administration wants to help install $15 billion worth of charging stations throughout the U.S. Sales forecast and valuation. So far, ChargePoint is doing a good job of keeping on track with its sales forecast as given in its original SPAC presentation. ChargePoint's actual revenue for 2020 came in at $146.5 million, well above its forecast of $135 million for the year. Moreover, the presentation originally forecast $198 million this year and $346 million in revenue next year. But in its latest March 11th earnings release for Q4 2020, ChargePoint indicated that its 2021 revenue ending January 2022 would be in the range of $195 million to $205 million. It will be interesting to see if they keep that projection for its Q1 earnings, Q1 ending April 30th. However, those numbers won't be out until early to mid-June. As it stands, the valuation for ChargePoint stock has fallen to a reasonable level. For example, based on shares outstanding, the stock has 6.51 billion market capitalization. This represents about 32.6 times its 2021 revenue and only 18.8 times forecast 2022 revenue. The out years are even cheaper if the company meets or beats its marks as they originally forecast in the slide deck. And there is good reason to bet on that happening. ChargePoint believes its sales trajectory will follow the natural upward swing of higher electric vehicles in the market over time. As shown on pages 11 and 27 of the slide deck, ChargePoint believes that the number of EV ports and its revenue will scale directly with the penetration of EVs in the market. For example, by 2026, the company expects that EVs will be 10% of the auto market by then. That will require a large number of EV charging ports. What to do with ChargePoint stock? In my last article on ChargePoint stock, I derived a valuation between $27.40 per share and $58.04 using a 15% discount rate and an 8 times revenue multiple. This works to an average price target of $42.72. This is 99.8% above today's price. However, keep in mind that this valuation depends on the forecast for 2026 revenue. It may take several years before it becomes apparent that the company can reach its 2026 revenue targets. Therefore, the $42.72 price target should be seen as a multi-year price target. For example, if it takes 3 years for ChargePoint stock to reach this level, the return on investment will represent 25.9% annually. This is still a very good return for most investors. And don't forget that as the company's revenue and earnings come in and meet or exceed its original targets, the return on investment will change. But this 25.9% expected ROI today represents a good baseline for investors to consider making an investment in ChargePoint stock. So far, there are no major analysts covering the stock, but I expect that will change soon. Watch the company's progress, especially with its upcoming earnings, to see that change. So we're going to be doing a technical analysis for ChargePoint. So let's take a look at its overall performance on the day. So I ended up closing the day at $20.20, being down 6.57% on the day. If we take a look at the day's range, on the low, it ended up seeing $19.71, and then on the high, it saw $21.77. So right away, which I want to bring to your attention, what are some possible areas that we can look at if ChargePoint decides to pull back even further? We noticed it did have a recent run as of late when the Joe Biden infrastructure plan came out, but as you can see, it's definitely given up a lot of those gains, which is no surprise considering the conditions we have inside the market. So if it decides to pull back even further, then a level that I would definitely be keeping an eye out for is right here around this $19.50 level. If this particular level breaks, as you can see, as we go down below, we'd want to see how well it could hold up this $18 level. And if it doesn't hold it up that well, then the next area where we have some proven support here is right around this $16.50 area. Just knowing those particular areas where this could possibly pull back, I want to make sure that you're also aware of this, because I do believe in the long-term prospects of ChargePoint, and if you do so as well, these are buying opportunities. Now, if we even take a look at the RSI down below, we already know we like getting stocks on a deal here. So the fact that it is well below 30, it's literally at 25, let's just call it that. So at 25 on the RSI, you're definitely getting a deal on a great company that's positioned to do a lot of big things. And we know and we are aware of this because when the infrastructure plan came out, it popped up to 32. So just knowing how much upside that you actually have, I think this is a play to definitely keep on your watch list, and it's one of the plays why I'm very confident in having in my long-term holdings as well. So one thing that we need to be aware of, it's definitely below all of the trend lines here, the 100-day, the 200-day, as well as the 21-day EMA. So this is oversold. That's all I can pretty much tell you guys. So I would want to see it start making a move to start looking bullish again, is to reclaim back to this 21-day at the $22.29 level, which is not too far off from the high that it saw at $21.77. But hey, if it decides to pull back even further, just more opportunities, right? So we're now on fintel.io, and we're going to be looking over the institutional ownership and as well as the short interest for ChargePoint. So a total of institutional owners is around 13. So let's see what institutions have been up to as of late. So we could see right here right away, as far as since April the 6th going to April the 16th, institutions are looking very bullish on ChargePoint. They are definitely loading up, as you can see here, from all of the new positions that have been opened. So definitely looking bullish here. As we take a look at the short interest, the short volume ratio is at 27%. So we know when it's above 21%, definitely some short squeeze potential there. So now what we want to take a look at is some short shares availability. So there's 1.2 million shares available to short with a short borrow free rate of 4.15%. And the short volume ratio, looking at just as of late, as we've seen, was 27.35. And we have some highs where it's been at 30.85 on April the 6th and 30.82 on April the 9th. So just seeing that there's definitely a lot of short interest in ChargePoint since it's above the 21%. When the stock does go down in price, it is fairly significant, and it's part of the reasons why we ended up seeing the serious drop that we've been seeing as of late. So for my final thoughts on ChargePoint, I'm going to continue to be bullish on this stock. If it decides to pull back even further, I see that as an even bigger opportunity. One thing that we need to keep in mind here, the analyst price target on ChargePoint is at $39. The stock is trading at that $20 range. So that is literally an upside of close to 100%. And like what we looked over in that article, this is definitely doable within the next 2 to 3 years. And if you look at the annual returns, that is looking really good for anyone who's interested in using ChargePoint as an investment decision by purchasing shares, of course. The next thing we need to realize, Joe Biden's infrastructure plan. Going forward, hey, we already know that EV adoption is going to be growing as the years continue. So taking that into consideration, ChargePoint can definitely benefit from this. And why? We already know that ChargePoint, in regards to charging stations, not only do they have 12,000 at the moment, that will increase over time, number one. And then number two, they have over 70% of the overall market share in that particular space. So this is a company that is definitely going to be successful. So one of the things I want you to understand is like, hey, yes, the current price of where it's at, hey, look at it as a deal. Yeah, maybe you might have gotten, maybe it was higher. Maybe you got in when it was at $25 or $30 or maybe even higher. But what I want you to be aware of is realize what you are holding. When it comes to investing, you just need to be patient. Unless you were trading and you're doing some short-term or swing trades, then of course looking at those support and resistance areas can help you. But again, that's a short-term focus. I have a long-term focus, and that's part of the reasons why I'm invested in ChargePoint long-term. Am I going to be adding on the dips? You damn right I'm going to be adding. So whether it hits the $18 range, the $17 range, or the $16 range, if I see this, I won't be surprised. I'll be making sure I'll be building out even further in my position. But of course, this is barring that, hey, you know what? Some collapse didn't happen. But you guys know what I'm trying to say. If things are ongoing as usual, but again, it's just experiencing some pullbacks, I see the opportunity. Even if we take a look at the institutional ownership, like I covered, there are many institutions who are bullish on ChargePoint as well. So just know this, be aware of this. If you haven't built out a position in ChargePoint as of yet, do some more homework, do some due diligence. Even if you are invested in ChargePoint right now, I recommend doing that as well. It's good to know everything that you need to know about the stocks that you are holding. Like we talk about on this channel, you got to make sure the stock that you have, especially if you're investing long term, has the KLTs. You got to be able to know the company, like the company, and trust the company. And just to kind of give you a quick little heads up here, when Biden came out with the infrastructure plan, ChargePoint ran up to around $32, right? Right now it's at $20. So just imagine when more news come out, more catalysts come out, and also when they start releasing earnings report showing that, hey, you know what, they're beating their estimates like they did previously, what do you think is going to happen with the stock price? It's going to go up. So this is part of the reasons why what's going on right now inside the market, this is temporary. Things will pick back up. You just need to realize that. I want you guys to feel confident about the shares that you hold, feel confident about the stocks we talk about on the channel, especially the ones that I have high conviction in. And like I told you guys in prior videos and in several videos, when it comes to your investment portfolio, penny stocks should not, and I'm going to repeat this, should not be taking up no more than 10%. You should not be putting up half your portfolio investing in penny stocks alone. That is a bad idea. You're going to be exposing yourself to a lot of volatility. So you should need to be making sure most of the stocks that you have in your investment portfolio are quality stocks. And for myself, I feel that ChargePoint is one of them. All right. So that's what I wanted to kind of share with you in this video today. I'll be talking to you guys real soon. Peace.